Hey, what's up? Quick live stream. I like to jump in on these without a whole bunch, I say a whole bunch of notice, without any notice at all. Just because I end up having a little bit of a break. So I just got off the phone with a family office. For those of you that may not know what a family office is, it's basically wealthy families will put together a team of people that will run their money. So instead of just handing over the money to another company, they basically have enough money that it's enough to basically support a whole business that manages the money. So in other cases, you might end up with, somebody charging 2 points, 1 point, whatever, and if somebody's managing $100 million, that ends up being a significant enough of a income that you can support hiring people. So this is a family office, and they are in the process of investing in a fund that's really focused on buying existing internet businesses. Now, the interesting thing here is it's not the space that we're in. We're used to talking about micro private equity size deals. We're talking about really tiny businesses that, I gave or did the video last time talking about a guy who just bought a small deal, and it's paying for all this expenses for him to move over to the Philippines and retire at 42 years old, which is awesome. But these guys are buying existing deals. So it's a little bit different than a little bit different than venture capital. It is true private equity. But they're basically buying larger versions of the deals that we're doing, heavily focused on internet businesses. And essentially, they just reached out because they know nothing about buying these businesses and wanted to get my thoughts on the strategy, what they're up to, and all this. And so, very interesting conversation. And I think the lessons from all this is there are several. Number one is just the fact that at the end of the day, networking is so crucial. So they found out about me through another person that does a lot of work with family office. I think it's easy, especially when it comes to internet businesses. We can get into our little silo and be in a room or be in a house and yes, we are live, Edgar. At least I hope we're live. Edgar just asked if we're live right now. Can you, let me know if you can hear me okay, and we'll know if we're live or not. But when you're, no problem, no problem. Just checking, just wanted to check and be sure. So the interesting thing with this space is that you can't be that internet entrepreneur just in a back room and working away or programming and trying to develop the new idea. Networking is a big part of making all of this work, and finding those right networks that you can become a part of is going to turn into real dollars, because you're going to get deals, you're going to get investors, you're going to get all the things that you need, operators, even connections to grow the businesses that you buy. So that was a cool thing, just to have them reach out. But the other part of this is, as I was talking to them about these internet assets, it was funny, and they were asking questions, and it just reminded me of the power of these internet assets. And one of the things I think for the right people, it's such a valuable time, because I think that as attention comes to this, because these folks are used to investing in just happy getting an 8-9% return. And that's all they're looking for. They're more looking for diversification. How can I get a decent return and just be as diversified as possible? Meanwhile, we get really obsessed with, like, how can I get a 20% return, a 30% return? And it's awesome because you can generate those kinds of returns. But the thing that's interesting to me is, I think the multiples just are going to continue to go up, because you have these other investors out there that are happy to get a much lower return than the one that we get. The other thing that's huge with this, and this falls under that category of just being a huge boost to your private equity fund is the fact that, if you're building a portfolio, there's just so much liquidity around being able to sell that business whenever you want to. We or just went through a sell of a deal, and it was cool. Within I had some people that were a little upset because we kind of I've got some new ideas and things I want to test as far as selling businesses, and going through almost like a launch when you're selling the business. And so we kind of started that process, and within a few days I had a full price offer, and so it just didn't turn into anything, it just didn't take long to sell. So what you have with this asset is most people in private equity are used to buying a manufacturing business. Traditionally, that was like the go-to play. You find a business that has a bunch of assets, load up the debt on those assets, and then slowly pay down that debt. One day you sell and you've made millions and millions of dollars. But when you do go sell, it may be tough, and you don't have a lot of options to exit that and get your cash out. You've got to find a buyer that also wants that manufacturing business. A lot of times that isn't going to work out. So now you're looking at, maybe I can take it public and go that route, which I can tell you from experience is a ton of work, and just a long and very tedious process. And then you're still at the end of it at the whim of the public market, and you may go to the market at either the wrong time in the economy, or it's a situation where it's just not that you've got a lot of other it's not something that's seen as exciting in the market. If you're going public and it's at a time where tech is super hot, or mobile is super hot, and you're trying to take public a manufacturing business, that may not be the best exit for you, or you get into refinancing it and then you're stuck kind of managing that. So you've got a very limited group of people that want to buy that. The cool thing with these internet assets is you can sell that to anyone in the world, and that creates this liquidity, and liquidity is something that investors value in a big way. Investors value liquidity. And so when you can bring that in your private equity fund, or bring that to your investors, like, hey, if we get in this thing and we decide we don't like it, we want to move on to something else, all good. We can exit these, and it's not going to be, and a lot of private equity exits, you're talking just from beginning to end, of starting to sell the business to actually closing this, 2, 3, sometimes 4 years to actually exit the deal. So to have the returns that we can get, which we're already, or when you're dealing with the regular private equity deal, or a private equity fund, you're talking buying things at 7, 8, 9, 10 multiple. We're buying them at 3, preferably 2, but 3 is amazing when you're comparing it to a 9. And the cool thing with these guys, and this is what made me want to jump on with you guys real quick, is that they're excited to buy things at a 6 multiple, because that's lower than the other private equity funds, and they're still generating a really great return, and they're obviously buying larger deals than the ones that we do. So it just brings home the fact that we can buy these deals at the multiples that they're at is a huge win. The fact that we can go out and raise capital from other investors and have them participate in these deals is a huge win. There is obviously risk. I'm always talking about that with you guys. You got to have your due diligence process down pat. You got to know that you got to buy deals where you're not going all in because you're stretching your money to get into one deal, because these things are risky. That's why we're getting these really great returns. And at the end of the day, you got to be able to structure the deal so that you're protected and your investors are protected. But between all of those things, when all of that is together, this is an incredible time. Anybody can play in this game. It's really cool to have the people that have gone through our program and put together their little mini funds and put together portfolios and raise capital, who've never sold anything before. because I think it kind of sells itself. Like when you've got somebody who's literally just never, so, I had one guy who just worked in the office, is just never sold anything in his life, and has more investors than he has deals. It's obviously it's just not his amazing selling ability. It is the fact that these things are really unique. They're really kind of a neat, unique opportunity. All right, we got a couple questions, and I'm gonna dip out of here. Feel free to put any questions here. I just wanted to jump on because that was a really interesting conversation, getting the perspective of a family office on this little space that we play in. All right, Brother Tolliver, what is up? Always love to have you jump on and give comments. Thank you so much. He has a question. How are internet businesses more liquid than other assets? I may have missed it. Okay, no problem. No, so he mentioned the high multiples. The reason that it's more liquid is when you compare that to selling a business that's offline, you may be able to sell that business to anybody within a 1.5 hour radius. People typically aren't going to go 1.5 hours to get to their business. So right off the bat, you're very limited. If you're selling that offline business and it's a restaurant or it's a spa or it's a blah, 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 typically a hair salon, you're typically going to have somebody that only going to get people that are have experience in that, because it intimidates people that they're going to have to learn and figure out from scratch, especially when it's something really specific like a restaurant. So you have this limiting number of prospects to be able to buy your business. And so those businesses tend to sit on the market, offline businesses tend to sit on the market for a really long time before they sell on average. So when you're buying a internet business and you compare those two, essentially what happens is you've opened up your potential buyers to everybody on the planet Earth, literally, because you can transfer that site to anyone. So it's an easily transferable asset, and that it makes it it makes it more liquid. It's the reason that stock is so liquid. The reason that stock is so liquid is that it's easily transferable to anyone on Earth, and so it's these are more work than a stock to transfer, but it can be transferred. The second part of that is the skill set isn't as crucial. So with the restaurant, you're going to really need to know how to run a restaurant. With internet businesses, the skill set is transferable, I should say. So it's not that you need some skill set, but once you know SEO, you can literally apply SEO to every single business that's on the internet. Once you understand Facebook marketing, you can apply that to almost any business. Once all these all these things can be applied. I'm gonna get to your question, Three Kings, and then but I'll answer Brother Tolliver, come back to Three Kings, and then I'll bounce out of here. So this is exactly what happens, and that's the situation that we're in. Brother Tolliver asked, "Does that inflate the cost?" 100%. So which is a pro and a con. Right now, it's a thing that I've talked about on the channel. You've got to look at the whole market, because right now you can get an offline business at a 2 multiple, and that's the upside. You can get financing really easily. You may not get investors as easily as the internet deal, but there are plenty of banks that will finance those. So the pro for the person that's doing an offline deal is that you're getting a lower multiple and you can get financing. And that's why I say, I titled this, I don't know if you guys can see the title or when that goes out, but I titled this that you are that if you're building a private equity fund, internet businesses are the best asset. So if you're going out and you're going to raise capital, it's going to be more attractive. When you're exiting, it's going to be easier to exit and get your investors paid. All of that is why it's very attractive. I think it's the best asset out there for private equity funds. I think argument is to be made, if you're doing, or if you're building a portfolio of business as well, even if you're just building a portfolio, because it's easier to manage those businesses. I get KPIs every day, really, on some of the business, just keeping an eye on what's going on, and that's a very easy way for me to keep up with each one of the sites. When I had 8 businesses that were offline, it was stressful. It was just very, very stressful to keep up with everything that could go wrong. So that's the difference there. Let me know if that makes sense. But the price is going to be inflated, but it's if it's a market price, I think inflate may not be the right word. It's just higher. It's literally worth more. The internet business is literally worth more because you can sell it to more people, because it is something that's endlessly scalable. One of the things I'll make a video about coming up is we had a deal. This is a unique place where you can buy one of these things, and the other person has no idea how to grow it. They don't see the opportunity that's there. That's very rare in anything else. When it comes to real estate, the average person has watched HGTV. Like, even if they decide, when we buy ugly houses, a lot of times it's just convenience. Like, they knew that, hey, we're going to get it at this huge discount. You don't want to do the work. We're going to do the work. You don't want that headache. They knew, and we just had to convince them to let go and not take advantage of that opportunity. When it comes to a business, an offline business, a lot of times people, like somebody who's been in that business for 30, 35 years, a lot of times they know, like, it's like, okay, I should be doing some more things online. I should be doing radio ads. There's just all these things that they know they should be doing or could do to grow that business. Interesting thing with the internet business is that there's like a lot of times where you're in a deal and like the seller just has no idea. It's like, man, okay, look at this backlink profile, or look at the fact that the keywords that they're targeting are way too high competition, or so, just all these different opportunities. Like, this business is perfect for Pinterest, and they have like no presence there. And they're not really coming to you. In some cases, they are aware of few things. A lot of times they have no idea. That's a really rare thing, where you go to a business and double, triple it just based off of knowledge. So really cool. All right, I'm gonna try. I got 8 minutes before my next call. Let's see if I can squeeze in some of these. Let's go back up to Three Kings. So, like, wholesaling internet businesses and profiting off the multiple margin. Yeah, I mean, you could wholesale, absolutely. So, I mean, you've got a few different options. You could, let me take a sip of my green tea real quick. So you've got a few options. I mean, obviously, the one is for you to raise capital and then just go buy that with your investors. One thing is, I love wholesaling. I love bird dogging. I talked on the last video, or maybe the video before, about paying one of my clients 6 figures for a referral. I want to keep my people that send me deals paid really well. So it could be a situation of just bird dogging. It could be a situation of like doing a flip, like a wholesale, is what they call it in real estate. Edgar S. Is it better to buy boring industry businesses? Yes. One of our businesses that has killed it the most this year is in the toilet business. Like, literally in the toilet business. I think I may have mentioned that before. It's great. It's a great business. Everybody on the planet Earth needs one. And so, yeah, boring. I'm not looking for cool businesses. I'm looking for strong businesses and cash flowing businesses. Three King also asks, where do we find the 2 multiple internet deals? Well, they do exist, but they're not waiting to be found. It's a big part of it is the same thing I talked about at the beginning of this stream, which is having a strong network. And I talk about the guy that just closed a 2 multiple deal and basically got it with no money down. In that situation, that was somebody who was going out networking, went to a event and let people know what he was doing. So it's just getting out there and connecting with people. Andrew, what is up? Andrew asks, how are you? And I think this is maybe the last one, guys, and I gotta get ready for a conference call. How are you evaluating your deals before you invest them? As in, what are you looking for to make it a good deal? Maybe make a separate video on this. Yes, I'll make a separate video on that, but I will give you the number one thing that I'm looking for right now. And it's something that anybody can do, anybody can use. And I'll tell you both of those answers real quick. So number one thing I'm looking for is how can we immediately grow this business? Is there low hanging fruit? What that typically means is that, do we have something in the portfolio right now that we can use to double or triple this business without having to do a ton of work or taking a lot of risk? You know, I don't want to double and triple a business because we're going to invest $250,000 into some new technology or some new SEO strategy or some marketing strategy. I want to be able to do that without taking really any risk. It's like, can we buy this and double, triple it without taking any risk? Typically, because we do have a portfolio, what that means is, do we have something already in this niche that we can cross market or cross promote? Do we have a business right now that has a product that maybe is a great add-on for this other business? You know, those are some of the things that we're looking at. And I think some people think, oh, well, you've got this portfolio of businesses. Like, I don't. But the whole world is really your portfolio of businesses. It's just a matter of structuring the right joint ventures. And that's our biggest focus right now is, let's go in. You know, I had a few people that replied to that joint venture video I did a little while back, and you know, just some really great questions and comments and thoughts on that. But anybody can do joint ventures. It's the most underutilized strategy in business. It's really amazing to me that there's so much focus on paid ads or doing so much you know, content marketing, and literally nobody's talking about, hey, there's just assets sitting there in other businesses that can be leveraged. All right, hopefully this was valuable. Thanks so much for jumping on, and look forward to chatting with y'all soon. Feel free to add additional questions below, and we'll get to those. And yes, absolutely, Andrew, I will go into detail. Obviously, it may be like a 3-part video because there's just a lot of things that come up, and that is perfectly on cue. I will talk to you guys later. Like the video.